Hello, David Shapiro, real estate developer and agent here in Austin, Texas, coming at you with our summer 2021 market update. A lot's been going on here. As you probably know, the real estate market across the country is hot, and I would say Austin is the epitome of that, with super low inventory and bidding wars, and you've probably heard all sorts of stories about it. So today, I'm going to break down the stats, show you what's going on, give you some anecdotes of what I've been seeing in the market through our interactions with buyers and sellers, answer the age-old question of, well, are we in a bubble? And then answer some other questions that I've been getting a lot of. I'll start with a little update on us. Things have been going great. Business is up. We are actually adding to the team to make sure that we have enough help to provide the level of service that our clients have become accustomed to. In fact, I think we're going to be able to even provide a better level of service by adding a couple team members. So we're excited about that. We sold a development project that we took from, a tear down, a house over on Riverside, and went all the way through the process, and it's currently under contract, set to sell within a couple weeks. So we're excited about how that project went, and we're going to be doing some more development. We've got a couple other projects underway, and a couple of cool listings, by the way. We've got a shovel-ready project over at 6 in Chacon, amazing location right between Whistler's and Via 313. So if you know anybody in another market and they're looking to do a project in Austin, it's a 60 unit, it's a micro unit apartment complex. It's a pretty cool project. Total project cost would be about $20 million. So right now it's available to buy the land plus the permits and the plans. So it's all entitled, ready to go, which normally is a 2-year process in Austin. We've already done the legwork, so somebody could just buy the land and be ready to build tomorrow. So if you know anybody that you think would be a good fit for that, please reach out. All right, so let's dive into the market and what's going on here, because you've been hearing about how hot it is, and I want to actually show you the stats. So I'm going to start here with the number of active versus sold homes over the past 4 years. And this is a chart that I've shown many times before in previous videos, so trying to stick to some of the same charts so you guys can see what's happening over time. So active listings in green, you can see this is a multi-year trend that the number of active listings or inventory has been on the decline. And so people think, well, this is just because of COVID. Maybe in other places. I do kind of follow some other markets, and some of these other markets that have been stagnant for a decade and then all of a sudden are popping because of what's going on with COVID, that would make sense. But Austin is not one of those markets. This is a multi-year trend of a lack of inventory, which I will get into later when we're talking about if this is a bubble. And you can see the number of sales in blue. It's very seasonal. Same thing with the amount of inventory, and the same with prices. You'll see as I go through all this. But what you can see is that despite that, inventory is just falling through the floor. And back in January, we talked about for the first time I've seen these lines cross, which is just crazy and sustained. And so I'm going to show you, as I've been tracking this, so many of you who've been watching these will recognize some of these. So March 20th, when it started to seem like, we got something happening here, I started tracking the number of active listings versus pending listings to try to give me a sense of what's going on in the market. And interestingly, and just for kind of my own and other people, I was also tracking the number of COVID cases side by side. So if you're curious about that, here you can see the numbers. I tracked Austin and New York City because some people say as New York goes, the rest of the country goes. I also happened to grow up in the New York metro area, lived there before moving to Austin, and it was the epicenter at the time of the coronavirus. So it felt appropriate to also track that. Now, here you can see the number of active to pending listings was at a ratio about 1-to-1 when the coronavirus pandemic hit. And then as things got locked down, you could see we hit about 1.45, and then May 1st, Texas opened back up, and slowly people started to trickle out and be like, is it okay to buy a house? And then by the end of May, it was gangbusters, and you could see this slowly dropping, and then it pretty aggressively, the number of active listings just going from about 2,000 homes on the market, which is a relatively healthy number, still a very strong seller's market, but much healthier than what it's dropped to over time. Here you can see I can scroll all the way down. By April of this year, January, You can see in December it was it's still above 1,000. And anybody who's coming to me in the fall and saying like, hey, should I buy? What's going to happen? I was saying yes. Generally what happens is the second week of January, people get out into the market, start wanting to hit their 2021 goals. And I knew it was going to be crazy come the second week of January. We did about $7 million in business in December because I was telling people, hey, if you're thinking about buying, let's get you into something now while it's the holidays, while people aren't looking as strongly. And those people, I mean, we've seen such a drastic jump in prices since then, are all very happy about that. It's pretty cool for us as a team because if prices are up 30%, that means the $7 million in people that I think were all buyers in December just happened to be, although we obviously work with sellers too, and about a third of our business is sellers, but that $7 million, I believe, is all buyers. And if we're up 30% in prices, that means we created $2 million in equity. That's so freaking cool for those clients that bought in December in a very short period of time. So I'm super excited for them. But it's not too late if you haven't bought, and we'll get more into that. But here you can see the numbers dropping off, and we've been hovering in this like 600-700 houses on the market range. And this is all residential within the city limits. So just to be clear, sometimes you hear numbers thrown around. When I'm talking, I'm almost always talking about just the city limits because that's where we operate. And so, I don't really talk too much about the suburbs like, Buda, Round Rock, places like that. So we're hovering in the 700 range. Now, if you had talked in January to me, it's like, well, let's hope that March, April brings more inventory because historically, that's what happens. The spring, going into the summer, more homes hit the market. That just hasn't been the case as much. And we'll go to some of these other charts here and look, and any inventory that has come on has just been swooped up. I mean, this ratio is now down to like 0.3 from, 1.0 and over the summer or during the lockdown, 1.45. So crazy difference here in the number of pending homes to the number that are active. And we're now selling about 300 homes a week closing. So those are the ones that are actually, people are getting keys to a new home. So that's a lot of homes for the city of Austin. And just as a nice update here, we peaked at about 500 cases-ish. And then per week on a rolling average, this is like an average of the last handful of days. And we're down to like 40 cases, which is great to see. New York City now at about 500. So that's all really positive. Moving on to some other stats here that we can talk about. A lot of the buying that we've been seeing has been in single family homes. That's where the inventory is way lower than it needs to be to make up for the demand or to keep up with the demand. And so I wanted to show you what's going on in condos. And so this is a chart we looked at in January, and you can see, condo inventory going down a little bit. And I was anticipating that as we started to get out of the pandemic, that this reurbanization movement that's been so alive over the last handful of years wasn't entirely dead and condos would come back. And so here we can take a look at what this chart now looks like, and you can see inventory has now dropped for condos, sales are up for condos, and this is condos and townhomes. And so although there's probably, we're not seeing as big of price jumps in condos, I think that's on the way, and that's up next. And kind of what happens with these things is like, okay, people go out to buy. And if they can't buy what they're looking for, then they adjust what they're looking for. So we had a buyer, he wanted to buy a house, and I said to him, look, frankly, I don't know if, based on your budget and what you're looking for, going for a house is going to be the best route for you. Plus, I also talking to him about his lifestyle and what he wanted. I felt like he would actually be a better fit for a condo because he's a millennial, single, being close to the action was important, even though he felt like he wanted to be in a house. We talked about it. He understood all these different variables, and he went for a condo instead of a house, which what he initially wanted. So people like that, and by the way, super happy. He's in a home. He came to us a couple months ago. We got him in a new construction condo. He's in it, and he was saying like, hey, some of my friends who started their search before me, they're still not even in houses yet. So I'm so happy that we made that adjustment based on everything going on in the market and his needs. So some people are making adjustments like that. If that doesn't work, then what's the next logical thing? Okay, I can't buy, anything that makes sense for me. I'm going to go rent. And so what we're seeing now is that rental prices are going up pretty drastically, and there are now multiple offers offers, but really applications on houses and sometimes apartments or condos in the Austin area. I talked to a guy that I was just trying to give him some advice on getting into a home to rent. And we were talking about, hey, can you pay 3 months, 6 months, a year's rent up front to really entice the landlord? And I'm coming at this from as a landlord myself. What would I want to hear from an applicant to help make me feel more comfortable going with them over somebody else? And what he said to me, which is really unfortunate, is, hey, if we can't find something, we're just going to have to go back to where we came from. Like, our move to Austin is not going to happen right now. We're going to have to wait until we're able to find a rental or something changes in the market. So I think that's kind of unfortunate. But what that leads to is increases in rental prices, which is positive for investors. And I guess just quickly to touch upon that, right now investors coming to me, it's like, hey, we're talking about 30% down and breaking even on a cash flow basis. Well, that is only for so long that you break even, because over time, as everything appreciates, rents go up, your mortgage payment for the most part stays the same, like the interest part of it stays the same, the principal, taxes can go up, and we've seen taxes go up this year. But for those investors, they're going to be seeing cash flow down the road. Properties I bought 8 years ago in Austin are now cash flowing really generously. And so that's going to definitely change over time, but knowing you're going into it with a break-even mentality. Another stat we've looked at in the past is, how does it break down based on price point? And it's unfortunately what I would love to do is break this down by zip code, price point, and all these different things and really hone in. But there's just not enough data to do that, because once you get that narrow, it's just not as accurate. So let's just look at price point as an example. And this is the sub 1 million. And then let's compare that to above 1 million and just kind of see the differences there. So you can see inventory for sub 1 million has dropped off pretty drastically from 2019 to 2021. We're talking about 2,000 listings to 600 listings. Whereas for above 1 million, it's about 300 dropping to 200. So it's about a 30-something% drop versus about a 75% drop in inventory. So there's more homes over $1 million compared to what we're used to. And then sales, you can see here, really the restrictive factor here is there's just not enough homes. And when we go look at this chart about how many homes are going to sell this year, that's the thing that would keep us from outselling last year, is just, are there enough homes available? And here in the $1 million price point, there's actually more of that. So sales are going up over historic numbers, whereas they're actually a little bit flat-ish here. All right, so moving on to the next stat I wanted to talk about. Well, we'll just talk about some of the general stats for Austin here. And this is April stats. And so we do a lot of these things, they're year over year, because as you saw the seasonality with everything, prices and inventory. So we're comparing what was April 2020 like versus 2021. And we're up 32% on the median sales price. Like, that's pretty staggering jump in prices. Number of closed sales is up 50%. Days on market is down 7 days. We have 33% new listings. So we actually do have more listings, but 65% more pending and 51% more closed sales. So we're just eating up all that inventory as soon as it comes online. And people, when I talk to them, they're like, oh, David, this house has been on the market 10 days. What's wrong with it? It's pretty crazy that that's where we're at. I mean, if something doesn't sell over the weekend, people are like, well, what the heck happened? Was there something wrong with the house? I will say on that point, it's always a function of price, because anything that's wrong with a property, for the most part, can be just adjusted with adjusting the price, and then the value becomes in line. It could be, oh, the pool is, leaking and you have to replace the whole thing and it's $50,000. Okay, just adjust the price, $50,000, to account for that. So all those things can be done via price. So that's generally the answer. And just to put it in perspective, like in a normal market, things sitting on the market for 60 days isn't abnormal. And so when we're around the median price and the median home, yes, if it's been sitting for more than a weekend, it's probably priced wrong. Something's going on there. If it's a more unique home, because I've had this come up, something in like the $2-3 million range, it's more unique, could sit for a month before the right buyer comes along. We had a listing like that last year. It was actually it sold this year, but we listed it towards the end of last year, and it was a live workspace, and it was very unique property, and it's not for every buyer, which is a lot different than a single family home for $550K. That's a 3-bed, 2-bath where there's a ton of buyers and way more than there are inventory. The total sales dollar volume up 101%. So when you take into account that prices are up 30%, closed sales are up, then that equals this crazy jump, doubling the sales volume for April of this year over last year. And then months of inventory, again, down to 0.6 months. Put this in perspective, what's considered a balanced market is around 6 months of inventory. So we were already in the seller's market last year at this time, and now we're in this even crazier market where it's like basically 2 to 3 weeks of inventory across the city. And in some areas, it's like 5 days of inventory, meaning at the rate that homes are selling, after 5 days, if no new homes hit the market, everything would be sold. So it's pretty crazy to think about. So even 0.6 months, if nothing new hit the market, everything would be sold theoretically in 0.6 months. So it's pretty crazy. Okay, let's look at some more general stats. So this is the number of sales. And I think, let me shrink this so you guys can see everything. So you can look year by year. So purple is 2017, 2018, 2019. So 2020, the number of sales during the lockdown dropped off and then rocketed back up as things came back open. So look at 2021. We're already ahead of pace here compared to, I mean, obviously a little bit less here. I think, again, just an inventory problem. But we're already ahead of pace here compared to last year. And I'm very curious. You can see it's starting to kind of plateau. I don't know if we're going to be able to get up to here because that's a lot of homes and there's just not enough inventory. Here's the average sales price. Of course, that 35% jump that we saw on the previous chart, you can see it here, or in the previous infographic. You can see it here visually. Median sale price was actually what we were looking at. Sales volume. So this is the total dollar volume. And we are way ahead of 2020. So even though there's less homes, we might sell less homes or around the same, the prices have gone up so much that the dollar volume should substantially exceed 2020, which I believe was, if you can see the slump here, but overall was still a higher year than any of the previous years. And then this last chart, which really, I keep coming back to inventory. You can see how it just started to drop off a cliff at the end of 2020, and we're still down here. And it's hard to imagine that that's going to change. And that's where we get into talking about, are we in a bubble? Before we do that, I'll quickly show you this chart, the chart of median price. So the one up there was year by year was separately. But here you can see it 4 years in a row. And it's seasonal. The price always peaks in the summer, comes down a little bit in the winter. But the trend has been up. And then you can see what it looks hyperbolic nearly here in 2021. I don't anticipate that this is just going to continue up. That would probably become an issue if we're seeing the jump we saw from December of last year to now on a monthly basis. If we saw that continue, that would be an issue. But it's probably going to continue up and start to plateau and just be not as an accelerated rate of appreciation. All right, let's talk about this question. Are we in a bubble? And I made my little bubble on the screen bigger for everybody. So, the thing about this is we're talking about a bubble. And so that was something that was not happening leading up to the 2008 housing crash. People were saying then was real estate can't go down, it only goes up. And there were seminars on teaching people how to flip homes within a couple months. And the appreciation rate in the sand states like Arizona, Nevada, parts of California, was like 40% a year for multiple years. That is not what we have seen just yet. So going back to 2008, and I'll show you some prices. Move my bubble out of the way. This is what prices have done over the past 16 years. And so one thing I want to point out is in the 2008 housing crash, Austin single family residential, that's what SFR stands for, dropped 3.4%. So Austin performed very well even in a downturn. We were actually, out of the 100 largest metros, we were the quickest to recover in just 11 months. And so you can see the prices then continued to go up pretty quickly. And we've seen average annual appreciation of 7%. Now, prior to this year, it was like 5.5%. So a 25% jump is, and all these numbers change a little bit. But, and when I say change, they change based on like what data set you're pulling and what time period and everything. But if we're saying so far it's about a 25% jump, last year was 12% over the previous year. So obviously these two numbers are a lot different than anything we had seen prior. Okay, and that could give people this sense, we're in a bubble. We're seeing this massive level of appreciation. And what we saw leading up to, and not necessarily in Austin, but with the numbers we saw in other places leading up to the 2008 crash was speculation. What we're seeing now is organic demand. People are moving here. They are putting down tons of money. Financing is quite different now. It is very strict, potentially the strictest it has been in 30 years. And I'm seeing that where it's hard to get everybody to get the loan that they probably should otherwise be able to get. And so the lenders are being strict. The appraisers are out there. People are putting down 30, 40% and making up the difference in appraisals. Those 3.5% loans or 3% down loans that maybe you've heard of, they're just really hard for people to buy with a 3% down loan right now when somebody else is willing to pay cash or at a minimum put down 20%. As a seller, at the end of the day, the price to you walk away with the same amount of money. But the reason, and I get this question a lot, well, what if it's the same amount of money, what does a seller care? It's, when you're evaluating offers, price is one factor. The other major factor is what's the likelihood that this deal is going to close? Because as a seller, you have plans, obviously you want to get as much as you can, but you also want to make sure that you get across the finish line because you don't want to start over. It's a hassle. Potentially, the house looks stale at that point and you're trying to plan your move. You want to make sure it goes through smoothly. So if somebody's able to put down 20% or more, it means they have more financial resources. So if the appraisal comes in low, they can make up the difference. Plus, there's a lot of sentiment out there about FHA and these other types of loans being a little bit stricter, harder on the appraisal. And so it's a little bit safer bet to go with a conventional loan and even safer to go with cash where there is no appraisal contingency and you can often close a lot quicker. And people, they tend to like that security and the speed of being able to do a cash transaction. So I think that the good news for Austin is that we performed really well. We have low supply, which means that it's not like there's going to be a ton of homes that are hitting the market all out of nowhere all of a sudden. This takes a long time to ramp up. People have to forecast, developers have to forecast, okay, what do we think supply is going to be like and demand? And basically their forecasts were off. They did not expect demand to be what it is. One of the major factors is baby boomers were expected to downsize. And instead what's happening is they are buying second homes and they are not selling their previous home. There's a lot of factors that go into that. One big one is that normally as a country, we save about $2.5 trillion a year. That's a lot of money. Last year we saved $9 trillion. That's a lot more money. And so people just have more money and they can afford to go buy a second home. They can afford to go pay 50, 100K more for the home that they like. And they're looking at it going like, well, I'm going to live here for a long time. And what does it really matter? And so they're willing to overpay for that really great home for them and their family. And the crazy thing is they're overpaying at the time, potentially, depending on how you're looking at it. But prices are catching up so quickly that it doesn't look like that when you look in hindsight. And I've actually been telling people, if you don't feel like you're overpaying, you're probably not bidding enough in a multiple offer situation. And that's just the reality of it. And I think making sure that you're looking at statistics and not coming from a mentality of like, well, I mean, this is just historically really expensive for Austin. And when I get the people that are saying like, oh, this is a bubble, like this can't sustain, first question is, how long have you been in Austin? And the answer is always that they've been here for 5, 10, usually, even more than 10 years. And so they're just thinking like, well, that home in 78704, I could have bought for $400,000 10 years ago. How is it worth $1 million today? Like it's hard for people. They have these reference points over pricing and it's hard for them to comprehend. The people coming from New York, California, and more expensive markets, they're looking at Austin going like, wow, this is a deal. The quality of life, the cost of living, and the housing costs are all lower than these other places we're coming from. It's a no-brainer. And so you have these two things at odds. And what's winning out is market economics, and demand is saying like, okay, there's organic demand and prices are going up because the inventory is low. So let's talk about materials going into it, because this is another issue that's going on, is that wood prices are basically double or something. And it's like the average home, I believe it costs in something like $36,000 is the lumber material. And that's up significantly over the last 12 months. And you can't just open up a lumber mill and solve this. They cost $150 million and they take 2 years to build. So we're likely going to be in this price point for lumber for at least the next year and a half. And there's a lot of other factors. Forest fires on the West Coast, Canadian wood beetles have actually been an issue, and then tariffs, which I've heard people talking a little bit more about. So maybe tariffs could change, we'll see, but it's unlikely we're going to see some substantial change in wood prices in the next year and a half. And when you look at all these things, steel and the other commodities over the last 10 years, the prices have been somewhat stagnant. So it's not that they're in a bubble, it's almost that we're just catching up with what values should be. And so there's no bubble in the commodities either. So if we're not seeing a bubble, well, what is a bubble? And they would be crazy appreciation of like 40% plus per year for multiple years. That is more like a bubble. And I'm not foreseeing that that's going to be possible. I've talked to Mark Sprague, who I've had and interviewed. You can go back and watch that. The head of information for Independence Title. He has also been looking at the data, and he doesn't feel like we're going to see that. This isn't speculation. Again, there's some irrational exuberance, which is a sign of a bubble, but it's not to the level that we were seeing leading up to the 2008 housing crash. And it's all based on organic demand. People that actually want to move here and live here. If it's a rental property, people are putting tenants in it. I always hear the stories leading up to 2008 of people, a lot of foreign investors just buying condos in places like Vancouver or Miami and not even putting any tenants in it. They just were like, I'm going to buy the real estate and sit on it. And that's not happening. Like, I've not heard stories of people just leaving their rental, I shouldn't even call it a rental property, just their investment property empty. That I have not heard of in Austin. So I'm sure it's happened, but for the most part, I haven't heard it. Going into 2008, there was actually too much inventory. So it was the opposite problem we're having now. And people were speculating, thinking there was going to be all this demand, and the demand wasn't there, especially because of the crash. And that's what caused the issue. So we are not having that issue. And we talked about lending being hard. Permitting is still hard. So catching up is not going to be an easy feat. And that's why we're forecasting that this is going to go on for several years. I mean, we're looking at prices continually either going up or plateauing for at least 5 years, likely. Based on everybody I've been talking to and what I've been seeing. So this isn't going to, the bottom's not going to fall out anytime soon. And if it does, I mean, here's what happened during a housing crash, a financial crisis, and a recession. Austin home prices dropped 3.4%. Now that's single family, by the way. So across the board, if you count for condos and townhomes, it was 3.5%. 80% of the transactions in the Austin MSA over the last 10 years were single family homes, just to give you a sense. So it's heavily weighted towards single family. And if you look at condos in downtown, that was hurt a lot more than, condos across the city, et cetera. And you can see the appreciation rate for everything, we're about 7%. And I also wanted to look at it based on a per square footage basis, just to see, what the trend was. Are we trending towards smaller homes, and therefore the price per square foot is actually going up faster? I thought that might be the trend. It's pretty darn close. So I wouldn't say that it's all that definitive there. And ultimately, what it always comes down to is job growth. And Austin is looking fantastic for job prospects over the next several years, decade even. Lots of companies talking about potentially bringing jobs to Austin. We have the big announcements that we've all heard in the last year. Tesla, Oracle changing their headquarters to Austin, Amazon opening a new warehouse, the Apple campus that is coming, et cetera, et cetera. And so Mark Sprague actually said that if 90% of the companies talking about bringing jobs to Austin did not come through, just the 10% that would still be enough for excellent job prospects and job growth in Austin. So that's pretty staggering. And, it was 20 years ago that like people didn't really know Austin. Now Austin, everybody knows what it is. Everybody's heard about what's going on here. And the momentum is going to be really hard to stop. And it's cyclical because what happens is like eventually there's enough jobs here, and then it brings more talent, and then it brings more jobs and more talent, et cetera. And now it's the point where companies are like, well, we want the talent. We got to go bring the jobs to Austin. And so that is one of the other things that we have going for us that's really strong. Let's get into some questions I get a lot. One, on that point about developments, people will often ask me, okay, where in Austin should I be investing? And generally what I tell people is you're picking your horse. Your horse is Austin. Don't get too down, into the nitty gritty of like exactly which neighborhood or which street I should be on. Of course, some neighborhoods perform better. But what I find with most people is they get into like paralysis analysis, trying to figure out the perfect part of town to buy instead of just focusing on like, okay, what's the property type I'm going to go for? And let me just focus on an area based on like it's easier for me, or I heard of one cool thing that I resonate with, and let me go for that. Don't spend too much time trying to narrow in on the perfect neighborhood to buy in. Because you can look at Austin, and pretty much in every corner of this city, there's some really cool development going on. I've heard the Next Domain mentioned about 3 different projects. And so being near one of those would be great. Near Tesla would be great. Apple, okay? I really just think that you're betting on a great horse, and you can't go wrong with buying in Austin. Another question I get, well, hey, should I buy in San Antonio or Buda or Round Rock, one of these other areas where prices are a lot less expensive? My take on that is I haven't heard a really strong thesis on why those markets are going to do better than Austin. Now, somebody out there might have one, and I would love to hear it, and I'd love to be swayed differently. So for me personally, I'm really oriented around convenience. I don't see the point in driving to San Antonio to do a real estate deal if I haven't been proven to me that it's going to be a way better return. And even if it's a slightly better return, to me, I'd rather just buy in Austin. I know the brand of Austin. I know that it's going to hold its value really well. At least that's my belief. And, when it comes to Buda and Round Rock, people, for the most part, aren't saying, I really want to move to Buda, Texas. They're wanting to move to Austin, and then Buta's like the default based on their price point and what they're looking for in a lifestyle. So I like to stick to Austin. I think it's going to do better in a downturn, and I think it's going to do better as things continue to rise. Although you might be able to pick, there's definitely other zip codes in other cities that will end up doing better than some zip codes in Austin. But on a whole, I just think it's the better bet for lifestyle. Now, taking a step back, I would say there's probably 2 instances where it does make sense to investigate some of these other markets. One, if you're starting your investing career and the price points in Austin are out of reach for you, then going to some of these other markets could be great to get investing going. That's one. And then I guess 2 is if you have some thesis, or actually I guess if you just live in one of those areas. If you live in San Antonio, then invest in San Antonio. If you live in Round Rock, invest in Round Rock. You don't need to come into Austin to invest. Should I sell my house right now? The market's freaking hot. Should I take advantage of that? Well, if you have something to do with the money, then for sure, this is the best time to sell. I will also say in my opinion, there has been, if you look forward in time, this is going to be the best opportunity to buy. So don't necessarily sell thinking you're going to get an opportunity to buy that same home back at a discount or a similar home. You should be selling because you have some intended use for the funds. There's other things to consider. Capital gains. There's a chance that capital gains tax go up, so you might want to sell this year and lock in at current rates. You could also 1031. I don't think that's going away. There's just too much going on with 1031s. It's a huge industry around 1031, so I would be very surprised if those go away. But sure, the capital gains tax could change, so that could be something that is taken into account with your decision to sell. But if you don't really have something to do with the money and all you're worried about is like, oh, well, it's hot, prices are high, like, are they going to go down? I would not sell. I would hold because the transaction costs are high. It's just easier to keep what you have. I would look more into a cash out refi and seeing if you can get some of that money out and redeploy it into a new investment. Foreclosures. People are talking about, well, we've had the moratorium on foreclosures and on landlords being able to kick their tenants out. And when this all comes to like a head, like that's going to create a glut of homes. That's not the case. Like the number of homes that are going to come through via foreclosure are going to get swooped up in a market like Austin so quickly. It's going to make very little, if any, noticeable difference in the amount of inventory or prices. If you think about a market like Austin, unless somebody bought this month, they have equity. And even if they bought this month, it's possible they already have equity. And the people that are buying right now are generally putting down 10, 20, 30%. The people that would be concerned would be the ones that are only putting down 3% because then they can't even recoup their transaction costs if they were to have to go turn around and sell. Now, of course, somebody maybe could overpay in an isolated situation. But the bottom line is people aren't buying with 3% down right now. The number of those offers that are getting accepted in a place like Austin are very, very low. And so the people that are buying now that have the least amount of equity actually have way more than enough equity to sell and not have to worry about going into foreclosure. And, the average days on market is like 7. You call a real estate agent, you could have the money in your hand within 45 days for your home. So the number of foreclosures, I imagine, are going to be low, and the ones that do happen will get bought up pretty quickly. So that's what I got for today's market update. If you have any questions, please reach out, comment below, make sure to subscribe. And if you want to get our email newsletter updates, we send out monthly with more up-to-date stats. So you can get this more routinely. Go to our website and there's a place to sign up, or email team@shapirore.com. If you're looking to buy, sell, or invest, please reach out. We'd love to chat with you and see if we can be of service.